G'day everyone, welcome back to Pete's Investing. This is February the 8th, 2023, and this is the US crude oil price update. We did draw these two lines, this diagonal descending trend line and also this key resistance area since our last update on this vertical line, and the price has retraced back to the upside and currently resting on that diagonal trend line. So overall we're still in a bearish environment on the daily, at least. If you look on the Stochastic 100-200, it's still breaking down and broken down through the oversold area, and the CCI itself is also in a bearish movement to the downside. On the 4 hourly, there is a slight break above the CCI, but that's also been tested again and breaking down then above again in the last few days. And also, if you notice, the Stochastic has broken up through the midpoint and starting to break down again. On the hourly chart, there was a bit of an advancement, but it's also broken to the downside, and it's now testing that moving average as well on the CCI, and the Stochastic is broken to the oversold area and potentially going to have a bounce. Now, depending on what time frame you're trading, on the daily at least, I would wait for the break above this key resistance area, but more importantly, a break above this CCI moving average to be more bullish. If you're trading the lower time frames, it may well probably wait for on the hourly, wait for it to break to the upside and might see that moving average on the CCI break into an upswing. And likewise, just be careful if you're going long. There may be some very limited movements to the upside. Just so have some take some pretty tight profits if you have to. Don't hold long term if you can avoid it, unless you see the on the daily at least break more confidently to the upside. Anyway, to understand how to properly trade using the average down approach, reference the playlist at the end of the video, and also some links in the description below. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends if the stock price goes against you. Don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating, and if you are going short and if you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.